the everything bubble. Yeah, I see it coming, where we have all of these financial markets going through interesting cycles of going up and or down really big. And we're seeing big moves right now in Bitcoin, and we talk about the everything bubble. We're talking about stocks, currencies, the COMEX trading system, the student loan debt, the whole loan debt period on so many levels at the same time. Meanwhile, Bitcoin has been holding and staying above 7,000. And I remember last buying it for fiat currency when it was breaking a little below the $1,000 mark in March of this year. I got four topics up. One is protecting profits, a fiat currency bubble. What should bubble collapse first, cryptos or fiat? And the silver Bitcoin ratio play. Loving it, yes. So we'll start off with protecting the profits. And when I get through all this, that will be the next subject within. And you're hedging a bubble, or as some might call that, of tail risk. The worst case, bad case scenarios. And a strategy for such is to make sure that the longer you're getting gains, the more you ensure that if this thing just rolls over, are not going to be in at least bad shape. And because of what you pulled out before the thing went free fall, there's your protection. And then the fiat currency bubble. I mean, I don't need to go over other things like, there's a lot of bubbles out there. The loan bubbles on so many levels, student debt, and so many different points of view within it. It's a big, massive scale. What's going to happen when and we're already in early news for the fiat currency in poor status, but when you upgrade that news, well, you are now getting more people that will be doing measures of getting out and into other things. Of course, cryptos and precious metals, probably the two most popular ones. And the one below, what's going to collapse first, cryptos or the fiat? I'm betting, and I would highly bet on the fact that it's cryptos that will be hanging in there well as a measure of money when fiat currency is not or is inflated so bad in price. And well, inflating so bad in price would also end, of course, that fiat currency. Now, the Webbot has been very accurate with the price of Bitcoin for quite some time, and it even amazes me as I state this after the first week of November is completed, when sometime many weeks, many thousands of dollars lower than 7,000, when it was predicted at the end of October the price would reach around 6,800 and change. Congratulations. And it's been doing well when it was talking about $3,000 levels. And the talk has been going into well into double digits and holding up afterwards. So I'm playing the fact that fiat currency will go before the cryptos. And when I talk about protecting profits, buying silver is going to be one of them. So I'm going to expand on this subject as I move to the next screenshot, or when I add more towards this white screen. Because I originally bought silver when the ratio would have been somewhere near 100, I would think. It was a very small amount, and it just worked out that if I bought a collector's coin, that worked out as a perfect gift at the time. It was so ideal to buy a microscopic amount. I think it was like 5 ounces, I think, for me. It wasn't much. But I think the ratio was close to 100 to 1 when I did it. So around maybe 0.05, I think it was like 0.06, 0.07 when you added that extra collector coin in. It was really low. Now it's getting way up there. Well over, it's $17 silver and like $7,000 Bitcoin. Over 400 to 1. It just keeps climbing higher and higher. When it was at 150, I was pretty darn near confident that its next term move was to keep rising and rising and rising, and it wasn't to 400 or 500. It looked like this thing could get close to maybe 800 to 1,000, if not even higher, depending on how long it takes for the silver gold market to actually have a big change within its system. Let's move on now to protecting profits. We'll get back into this silver Bitcoin ratio as we move forward, however. And when I started with a decent three-figure bankroll, which means a number doesn't start with a 1 or a 2, we'll say, and I've turned it into a decent five-figure bankroll, and done so in about 275 days. Quite frankly, that was about what I wanted to do. I've done so maybe about 10% faster than I originally wanted to, so I've outperformed my original plan. I've also learned a lot of things I wouldn't have thought I would have also figured out. But the plan was always compounding gains, and I needed a safe and smart profit-taking strategy. Tail risk, betting against the worst case scenarios. And the original plan was to profit take up to 5% of the bankroll after you make good gains, like new portfolio highs, and do so when they are decent over the previous withdrawal. So if you started with 1 unit and you go up to, say, 1.5, 10% of that is 0.15, half of that is 0.075. That's the maximum you want to take out. And maybe not consider a withdrawal again until maybe 1.8 or 2.0. If you withdraw again at 2, you can take out a 0.1 and go down to 1.9. And as that went on, I was doing 5% the first or second time, maybe not quite. Lately, I've been doing a lot of 3% because I am relatively confident in the short to mid-term that Bitcoin prices are going to do very well. But I have to ensure that I get profits within it. And when I take a silver bar or some of those silver coins and rounds that I have been able to accumulate, I realize that I've only gotten a little bit. If the worst case scenario were to happen now, that would really suck. But I have a risk-reward plan where I can accumulate much more silver later on, and that is the actual plan. And there's only 2 ways of profit taking today, and that's buying physical silver, and that's very easy to do, and using it as money for things like Amazon, your groceries, when you go to restaurants, the gas stations, larger stores, and even though none of these places accept Bitcoin, there are ways around it. And it looks like for Amazon that those ways around it might be coming to an end, because it looks like they're coming close to using trade, it looks like, within Amazon. At least that's what I am hearing through the grapevine. And that's obviously a bullish sign for Bitcoin, Litecoin, Ethereum, and all the other cryptocurrencies that are good ones, and even some of the ones that aren't good, as there should be higher prices for such. And I have written here Bitcoin 10K as well as 14, 20, and 35 to 50. And I guess you could keep on going incrementally. And if you do so, you want to make each number significantly higher than before. So the next one go double, then triple, 5 times higher, so on. But I'm not going to. But a Bitcoin 10,000. And you know what? It's really not that. Because as a trader, it's what the value is worth. Because sometimes I can have maybe Bitcoin prices go to like go down and back to 7,000 and my portfolio will be much higher. It's always about that key number. But using this as an example of what I think my portfolio would be like at these numbers, I will probably do a regular profit taking session. Now, most likely this will come around Christmas time, so part of the actual buying might be Christmas gifts. I've already bought in silver Christmas rounds, so some of them have already been purchased already. And it's just a normal, regular profit taking session. Now, in this one here, I have thought about if Bitcoin comes to this area, I'm going to probably do a little more aggressive of a profit taking, but not too big. Maybe 10% physical, which means using it as money, getting money with it, same thing, and of course buying precious metals. And even, of course, I'll most likely be betting against Bitcoin, like buying US dollar tether, and that is a cryptocurrency, which is like a fake US dollar. And well, the US dollar is like a fake version of money, but that's just my interpretation for such. And do things, of course, to try to increase my Bitcoin, hoping Bitcoin would go from 14K, maybe break below 10 to 7 or 8, and then ride it back up to 20. Now, along the way, I'm going to need to know more information about different parts of the markets because that is going to get key. But as I get to these larger levels, I realize I'm going to have to do some greater take like pulls, maybe another 10 or a 15% pull here. While along the way that it gets there, as my portfolio grows, I'll do my normal under 5% pulling out of the portfolio here and there. And then, of course, when you get to the big levels and this thing just gets really wild and overextended, your value of what you have is so high and just makes it so easy to not only withdraw, but I think you have to do the smart thing. And again, you're normally taking a small amount out, at least I'm normally taking a small amount out, maybe consider a bit more. But what's in the way I'm thinking, and of course, events of the future can always and usually do change the play outcomes. Is when do I plan or think? That's the best word. Think, project that I will be making a large withdrawal out of Bitcoin, which is basically close to half or more, even 35-40% is making a big play. That something is probably not as favorable. Or, of course, something else is more favorable. That's the same thing. And it's going to come down to silver. I think it really, really will. Because the interesting event would be if there's major dollar failures, the news is rushed in big, where from before it was a lot, not as much news on the weak global fiat currencies, then the market's charts are going to show such. And you'd probably see gold and silver have tremendous moves higher, but you'd also be seeing Bitcoin and Ethereum and the other cryptos having tremendous moves higher, and maybe even seeing the crypto markets outperform with both of them going up insane. Maybe you might see a month where Bitcoin goes up 4 or 5 times and silver only doubles or goes up 160% or 200%, which is big for silver. Exactly the whole point, though. But that's because of the way it's traded within its current markets. And when the ratio is under 100, I remember buying small, and then I remember buying when the ratio was 150, and well, I remember buying in the 200s, and I last bought in the ratio in the high 300s just recently. And I plan to buy again in the 500s and 600s and 700s because I was thinking when it was 150, and this thing is probably going to go up and really fast, really soon, and it's going to be high. I can't really target right now the number, and I still can't today. But 800,000 and who knows how much higher than that is most certainly not an insane number. In fact, insanity might be talking about 800 to 1 and or 8,000 to 1 rather, and anything much higher than that. And that is why I want to just take out small chunks. And when you get to situations where Bitcoin keeps going up and silver just keeps on being grinding lower or barely making a bull market, then it just becomes so easy to keep on buying, which is what's going to be fun about this. However, when you can be able to figure it in time, when situations like silver being able to trade on a free market, and the Bitcoin ratios, just that market gets well out insane. Let's just assume that it goes way up and it's, say, at 1,310. I mean, who knows how high it can get? Bitcoin prices will assume are, well, let's just assume silver prices are 30. Heck, even 50, because the thing has been rallying. And that means that Bitcoin prices would be 65,000 or so. And you know what? That really wouldn't surprise me. And we'll say maybe a year, 2 years, who knows? But 65,000 Bitcoin, $50 silver, and a ratio somewhere around 1,300. That would be incredible. But if I can get really aggressive in here, I'm thinking, wait a second, wait a second. Let's just say something happens where I do really, really well as expected. And quite frankly, if this were to say happen in 10 months from now, even better if it happened in 20 months, that I realistically think that I should have at least 50 Bitcoins, given how well I am trading and how well I've been able to pretty much start with like a 3-figure to a 5-figure. I've already moved up 2 levels. So another level is 6 figures, and the next one is being the millionaire. So that's going to take a few months to get to those 2 levels. Okay, so be it. But if I get to a point where I'm like, you know what, if I got 50 Bitcoins here, and I might come and say, you know what, even if I were to take 10 Bitcoins, that would be a situation where I can get 13,000 ounces. I can get 20,000 ounces for close to 15. And I would seriously be considering making a play like that. And a lot of it is going to come down to, of course, just the dynamics of the mathematics of how high and low these markets have been moving, in the conjunction, of course, with Bitcoin moving higher and the precious metals being crushed lower for the last 40 and really 140 years. And that's why we're living in very, very interesting times. At least I think in such. Now, there's one thing mentioned by Mike Maloney that I think needs to be talked about a little bit more, because I'm not a big fan of this strategy, although it does get some of the job done. And when I talk about my strategy about pulling like 5% out every so often, I consider that to be tight. But this one could be even tighter. Well, maybe not, maybe not, maybe not. Because I'm just thinking how many times I'd be pulling 10 or 20% out if I did it on a double. But I've been very, very aggressive in the early stages in making sure that I don't pull out until I need to. But when you start with a small amount, there was really no need to either on the early stages to pull anything out. But if you pull out 10 to 20% when a market doubles, let's assume you have 1 unit and you pull out even 20%. That means it would now be worth $1.80 after you pull out. And then the market doubles again, which would normally take it to $3.60. Actually, that'd be 10%. So let's even do $1.60. Okay, no, let's do both. 180 and 160 in here. If you pulled out 10%, you'd have a balance of... No, excuse me, if you had 2 units, you went from 1 to 2. That's it. If you went from 1 to 2 units and you pulled out 10%, you would be at 160. And then from 160, when you double up from there, you would essentially go to 320. Okay, you know what? This is a pretty good number, I think. And then once pulling out 10% or 20% on 2 would be 160, so 180 would bring you to 360. So when you double up again, you would go from 320, and normally you would go to 6.4, and here you would go from 360 to 7.20. But you're going to be pulling out 20%, so that's 128. So that would put you at 512. So we can see what's happening with your bankroll every single time you are pulling out this amount on the double, that you're getting some profit taking, which is good, and your bankroll does remain very, very high. And this will do well, but there's going to be cases where you're going to want to do even higher percentages as well. With 720, if we take out 10% again, actually 720, we take 72 cents out, so about 650, approximately, give or take a few pennies. So you can see you're just building up big bankrolls. So if your purpose is you want to profit take a little bit, but you really want to ride this heavy because you think you can get future gains, then you don't want to do much more than this. But one of the basic math principles on playing whenever a market doubles is that it's very, very easy to just do simple math to determine how far you want to go. I can't delete the rest of this simple, so I'll just scratch it out. Because if you're going to go from 1 to 2 and you take out 50%, then technically speaking, you are profit taking every single amount of profit that you have taken. It's a very aggressive level of such. And you are essentially riding the same wave that you did before the gain started. If you want to ensure that you have more of a profit that I was showing in the graph, and you don't mind, instead of going from like 2 to 7 that fast, going to 2 to 5 or 2 to 4 is good enough for you, then you might want to consider doing 30 or 33%. Even 40% is very aggressive. It's going to be hard to increase a bankroll, but it still can be done. And the higher percentage you take, the higher it will be to compound your gains with successful trading or gains amongst what you're playing. And of course, in a situation where you think that there's a spot where I really want to protect myself, I think there's a very good chance what I'm into, like say cryptocurrencies, is about to pop, but I'm not sure, and I'm doing so well, I want to take a small risk and play just in case. That's where you can consider selling maybe 3/4 of it. Because when you look at what you will be receiving, I mean, you are getting way more than you had. I mean, you've already won and then some. And then if you're wrong and then cryptos become the biggest thing in the world, the US or the national currency of the world, the reserve currency that is, and then Bitcoin might double or triple or go up 41 times again. And although you could have had more, you'd be glad you kept a quarter of what you had in those kinds of situations. And then of course, if you're right and then the thing just goes to nothing like the tulip mania and you lose that little bit that you had, so you had 100 Bitcoins at that point, you sold 75 worth of them, and you've seen your other 25 Bitcoins go to like close to nothing, you can technically laugh that off because of smart profit-taking strategy. And I'm giving basically my ideas. So what you do, of course, is obviously up to you, but I highly suggest that You try to go through all different scenarios, the most information that you can get, and do towards yourself as far as getting your mathematics and accounting of things in order, the better off I think you can be. The spreadsheets today, they can do a lot of great things for people, and especially in this business, they can do wonderful things to help people out to essentially make sure within risk reward management, because for me, that is job number one. And I can tell by watching Mike's video that for him, it is most certainly the case. And the one thing I really do like about getting physical silver that I didn't mention, at least in this video, I've mentioned it before, and Mike Maloney has mentioned this as well. You're getting a physical, real commodity that, well, it's liquid cash as far as I'm concerned, because it's not that hard to turn it into cash within the day. It's very, very easy. And the price of such, yeah, we could see it go to 15 and 14. Would 13 and 12 really hold for too long? Which is exactly the point. There's limited downside risk. And as I've been talking about, and as I'm playing for myself, I do realize, especially when I talk about the gold or the silver to Bitcoin ratio, that the near-term gains and probability odds for Bitcoin is extreme on the positive side, and not so much for silver. But when Ethereum, when that baby broke out and got close to 400, it was much, much lower when it got going, trading in a free market. It wouldn't surprise me at all to see a situation where silver moves on a free market, and it's probably going to be cheap when it leaves the last market, which is probably the current one. Maybe it's only like $92 or $150 or $40 or $20. I don't know. We'll say 92. Next thing you know, if it trades like Ethereum did, maybe 12 days, 40 days later, this thing might say 1475. That's how extreme that type of move can be, given how the world has been transforming, not only over the last 10 years since the last major bubble, but really with the ever since 1913, as the Federal Reserve began, and the silver prices then, and how it has been basically controlled through its entire duration, going through its various cycles. And when we look in the future, I think, and historians, it really does not surprise me if we look back and the story of this Bitcoin on so many fronts, but at least on a price action chart point of view, will be by far one of the most talked about, at least like big markets ever. It's going to have crashes, whether it's good or bad, but the crashes will be much worse if they become bad. Because as I see it, I'm going to finish the video off with this topic. It's at 7K now. If this thing was just to keep going higher, and a few small corrections along the way, but keyword is few and small. Next thing you know, this thing is at, and you can pick, we'll just do like two different numbers. One is, say, 75,000, and another one is, say, 500,000. Now this thing is going to start crashing now. We'll say it's the top, and you get some sort of big down move. I'm not going to, maybe if this is 75, this might go to like, say, 22 on the 75, and only lose about 70 or so % of its value. Only. But maybe it's at 500, and then this falls to, say, 100, and it only loses 80%, or maybe just 71% of its value. I do expect that to happen. But the question from here would be, if it's real and it's good, it would be similar to the NASDAQ. Sort of like how the NASDAQ had its 1990s rise, had its big fall at the start of the millennium, and is now above its previous high. So Bitcoin would probably take a long time to get back here. It could be several years. Or in its case, maybe many, many months, maybe over 1 year. And then have its bull market stuff. But if it's not, then when you get to this bottom point, maybe this rally in here won't go higher. Instead, it would do further legs lower. And if you can get yourself in a position, of course, to be able to ensure you get profits on the way up, then you want to make sure, at least I want to make sure, that if a situation like this is to occur, and I'm seeing the markets move down like this, knowing I've already profit taked, I don't care when this bottoms. Well, it doesn't. I have to be ready for each situation for either this to have a bounce at such a huge retracement and go higher, or have a bounce from a huge retracement and then retrace a whole bunch more. And if you can be in line for those situations like that, then I think you're doing really, really good. Thank you for tuning in. Have a great day.